Hello, everyone, and welcome to another installment of This Week in Crypto, a weekly community call where the Santiment team and the community members talk about interesting and notable insights that we have found in a variety of our tools. As usual, I'm joined by Brian, Jan, and Val. We might have a few other people joining along the way, but what's going to happen over the next 30 to 60 minutes is we are going to look at some interesting and notable events and chart setups using various of our tools, Sandbase, Sanddata, and Sandsheets most prominently, and we'll discuss what it might mean for the current state of crypto as well as for the short-term future. So as usual, Brian, I'll start with you if you want to share your screen, and we can go from there.
As usual with an NVT update. So we had a rather volatile week. We dipped below 7,000, went all the way. I think the low was around 65, 66, at least from the exchange prices that I was looking at. And now we're back at 71.50 at the time of this meeting. Because of the extra volatility and 7-month low that we had, I think the last time we hit 65 was in May. So because of all that, token circulation was really picking up. There were people that were talking about possibly dropping out, people that were buying and longing from that spot. We saw evidence of that on our social trends, showing that buying and longing had an increase in discussions. I did not see the same on the sell end, but anytime you see a 7-month low, it's generally implied that more people are dropping out or selling their bags that they had been holding for a long time. And I'll show that after I finish NVT here with the long short MVRV difference that we're tracking right now for Bitcoin that shows that we hit a key threshold. But first, I will move on to Ethereum here. Ethereum actually has had very, very impressive days the last 3 days. Generally, these metrics, the last 3 days and last 4 to 10 days here, represented by these 4 hash marks, reflect more or less what's going on with Bitcoin. But you'll notice here that the hash marks are just a bit below the average month of December, which is represented by this latest red bar. In Ethereum, it's way low, like below the 50% mark. So that generally is a good sign. And if this keeps up for another 5 to 10 days, that could very well be a sign that we are starting to head into a turning point, the same one that we saw like in December, for example, where we hit that low of 109. Who knows if it goes to that same number? As I say with NVT, it's more about the actual token circulation picking up than the actual price associated with when it does. So I'm watching Ethereum closely now because it looks like token circulation is starting to really pick up, and that is encouraging for the price. So it could be a buy time, but I'm not ready to say that yet.
But you're right. I think if you go to the metrics for Ethereum, I think you're correct. I've seen some uptick in general network activity. This is one of the things that I wanted to talk about this week, actually, is if you go to Ethereum and look at network growth, there's a huge spike for reasons I'm not entirely sure of that happened this last week. So scroll down to the second chart.
Network growth.
For Ethereum.
Yeah, it's Ethereum. It's just loading right now.
Oh, okay. Yeah, you'll see a massive, I think the biggest spike in network growth over the last,
Oh, yeah.
over the last like 4 to 5 months or something. 145,000 new addresses. I actually wanted to discuss this and see if there were some possible explanations for this, because it seems like we've been pretty much consolidating in terms of on-chain activity for Ethereum for a few weeks now. There hasn't been much activity to talk about really. It seems like everybody was kind of ambivalent about the market and waiting for the buck to break either way. But all of a sudden, there's this huge expository spike that might indicate renewed interest in the network, or it might be something else that I'm not sure of at the moment.
Yeah, it's interesting. The last spike that was of this significance was in May, very late May, or actually it looks like June 1st, excuse me. And when that happened, we were at 275 and went about all the way to our high of 307 a month later. However, this spike came at a lagging opportunity as price had already risen pretty significantly in May. May was when pretty much all of crypto was really starting to rebound, and everyone was talking about Bitcoin and other altcoins having a new resurgence, similar to what happened in 2017. That obviously was not the case, but we can see here that this one was lagging, whereas this one doesn't seem to be coming at any specific time related to price. So while this was FOMO related, we can't say the same here. So that's definitely I have no problem segueing into talking about other reasons, and if anyone else has some possible theories as to what's going on with Ethereum from a fundamental perspective, please.
Yeah, it would also be nice if you can afterwards show the social volumes for Ethereum over the last few months, just so we can see if there's some increased chatter in terms of ETH and ETH related keywords and what the our social word cloud is kind of saying the crowd is mostly talking about in relation to Ethereum. But yeah, there seems to be some event. It might be a new some sort of event on chain that is contributing to a lot of heightened activity. Some of it might be bots, but yeah, see,
Yep.
there's also
That's
a big mention spike there.
So this was on Monday. This was, I think, when it hit its low, right, of 118 or so. I don't know if I have that number perfect, but for Ethereum's price, let me switch to Ethereum. That'll actually show it here. 122 was the.
And can you go to 6 months instead of 3? Sorry, just so we can kind of see a bird's eye view. Nice.
So 6 months here. This was our biggest spike in Ethereum mentioned since September, and probably even a little longer. So mid-September was the last time we had this much chatter, and it appeared to correlate with the low. So it was a lot of people being opportunistic with the major dip that happened, not just with Ethereum, but with all altcoins as Bitcoin dipped to about 65. Very interesting.
Yeah, I mean, I'm not 100% gonna sway either way on this, but it does seem like because this is not a spike in daily active addresses, which would basically show you the total amount of
Right.
active addresses on a network. This is a spike in the new addresses created on the
Yeah,
network.
that's a whole different ballpark for sure.
Also, it seems there is an increase in transaction volume and circulation in the last couple
Yes.
of days.
Yeah,
And
that's
actually,
correlation with MPT, so it makes
yeah,
sense.
and the mean age of the Ethereum being like overall, it seems to be starting to flatten. So that kind of confirms that it's just a lot of Ethereum is being moved around, which impacts the age also.
Yeah,
Like, and this is something that just is happening right now. Generally, if we see like a huge drop in, well, actually, there has been only one huge drop in mean age that happened end of 2018 when Coinbase moved their cold wallets. But yeah, this is kind of an interesting event indeed. Like, it will be interesting to see why this usage of Ethereum is increasing so much.
Val,
yeah.
correct me if I'm wrong here, but given that this is a spike in network growth, like should this be more of a bullish signal than anything else? Because it's like basically it's just a new ETH money, right? Or new addresses stocking up on ETH for some reason.
Well, it could be also some huge airdrop that actually airdrop won't actually cause it. Like, it could be some kind of activity. Let's say if there is like a Ponzi scheme that is going on that involves a lot of people, and suddenly a lot of people decide to play with the Ponzi scheme. But here we see only activity that is related to ETH. So these metrics could be impacted by token activity, but the only way they could be impacted is by addresses paying fees to miners. For example, if I send some token to 100 different addresses, I'm going to do this in many transactions, let's say. If I do it in many transactions, I'm going to pay fee for every one of them, which will be some Ethereum, like small amount of Ethereum I pay. But here it doesn't seem to be the case, because this shouldn't increase the transaction volume like significantly, because these fees are not so big. So maybe it's something else, not like a big airdrop.
Mm-hmm. Yeah, and as we can see, it's the highest token circulation we had since late July or so. So something is certainly causing it, and airdrop would make sense, Valentin.
Yeah, I think so.
Very cool. And I also wanted to show off the DAA daily active address divergence. And I'll kick it off with Ethereum just because of the fact that we're talking about it right now. I think this is the first time we talked about it on This Week in Crypto call, but for those of you unfamiliar, what this simply measures is the amount of active addresses that are showing, and exactly when a threshold for buying or selling crosses. This was made by Jan, who found that having a threshold of 0.3, and he might be able to explain how those thresholds are calculated better than me. But from what I have recognized, if you have a group of these happening, whether it's a red sell or green buy, that is generally a sign of a turning point. So this one was very telling right here in March of 2018. This was on the rebound of after it dropped from its high of like 11 or 1200. And that had a nice rebound. And then we had these signals. Notice that they are leading indicators too. These weren't happening after the fact that it started to turn. These buys were very much beforehand. These sells were very much beforehand. These were kind of choppy signals, so we're willing to throw these out as outliers. But this one was very telling, and it happened right before a big rise in late 2018. And now we go all the way to present. We've seen mostly flat non-signals going on, but we did see a few buy signals here, and we're starting to see a group of them form right now in present day. So if we start seeing a group of several, like 5 to 10, over the course of the next 2 weeks, that would be a clear point that it's time to buy from a daily active address perspective. Any other things we want to say about Ethereum, and then I can show Bitcoin?
Yeah, it would also be a good, before you continue, if Jan can just give us a bit more details as to what how this is calculated and the parameters used, Jan.
Yeah, particularly the threshold calculation.
Yeah, so actually relatively simple from the math. The core idea is basically we look at times where the trend of the price is going kind of like the opposite way, or very, very far apart from the trend of the daily active addresses. And whenever that happens, that is a pretty interesting tell, because it's kind of showing, okay, like the fundamentals in terms of active addresses are going another way than actually the price, and a lot of the time the price actually tends to follow. So what we do is basically we calculate the trend over a certain period of time. In this case, I think 21 days. We calculate the trend by basically calculating the log returns over that specific period of time. And if that is, for example, if the daily active address trend is going upwards and the price is going sideways or down, that is an interesting buy signal. The other way around, if we have strong price trend upwards, daily active address is kind of trending downwards, then that's kind of more of a sell signal. And as we can see, it works pretty good. An interesting other threshold would be 0.5, which would roughly translate to a difference in percent change of 50%. Like we kind of want to change that from a fixed threshold to maybe a standard deviation or two. But the, the idea is pretty simple, but it seems pretty.
Guys, can one of you? There seems to be some noise. I don't know if it might be on your side, Brian. If you can just mute while Jan's talking, that might help it.
Okay, yeah, but basically, that is it. So a lot of the time, it seems to be very, very spot on in finding dips and peaks, and it's not a strategy on its own where you can basically sell every time it's a sell signal and then wait till a buy signal or something, because it's not really that kind of like fully functioning strategy, but it's insanely useful in terms of additional insight, additional information to your strategy, because the signals seem to be very spot on a lot of the time.
Yeah, thanks for that explanation, Jan. I'm trying to show what it would look like at 0.5. Obviously, it's a little bogged down right now, so if it loads while I'm talking, that's great. But what we're trying to take away from daily active address divergence is that it works well in tandem with other metrics, and shouldn't be used exclusively by itself to make decisions, because as we can see, not always do we have signals that are properly firing for what the future markets are doing. Is that fair to say, Jan?
Yeah, a lot of the time it's not. Basically, a lot of the time, especially I think in Ethereum here, you would miss out on a lot of bull market if you were to always just wait for the next signal to show you the way. It's more of a short-term, like trend reversal kind of indicator, and not like a full-on long-term strategy, basically. But it, as I said, looks pretty promising.
Cool. Thanks, Jan. And I think 0.5 did load here. It's hard to tell whether there was a significant change, but I'm still seeing plenty of consistency, particularly over the last 2 years here, starting in early 2018, with what signals were firing and what direction we went. Other than right here, that was a bit choppy. But I think this is really cool, and I wanted to show what it looked like with Bitcoin as well. So this is on 0.3 for the threshold, which was defaulted to what Jan created it as. We do see less signals, but there was some consistency going on here when finding the low in late 2018. Plenty of buy signals were going off. This was when we were at, low 4,000s and actually at 3,500, 3,400. That's when the signals kind of stopped and we started seeing that reversal. And then right here is interesting. So when we made that huge rise in mid 2019 from April all the way to mid July, when we hit our top, these were actually all sell signals going off, which is significant because even though they were happening as the price was rising, they were a bit spread out here on the initial spike, and then we had plenty of them right here at the top, and it was showing that we were just a bit overheated. So price was diverting from the amount of daily active addresses that were justifying the price that was going up. So it was basically telling us that it was being overbought at this point. And since then, we've had, mostly just blank signals, not a lot of thresholds firing or crossing in either direction, other than this one singular day, which I wouldn't recommend holding on too much credence for. We want to see groups of them, as I said. So we're watching Bitcoin closely, but it's mostly just been insignificant signals right now, unlike Ethereum, which is full of them. So I find that interesting. But, as I said, watching NVT and others like MBRV to go along with it is a good way to come up with a good strategy for yourself. And then Maker here, I made one for that as well. I wanted to see what it would look like with an altcoin, and Maker is a good example. We're actually seeing pretty decent correlation here over the last couple of years. I started it in late 2017, and every time there's a huge group of buy signals, it tends to be a temporary bottom, and we see a rise thereafter. We saw a small group here on the very big rise that basically reflected the same rise that happened in late 2018. So this is late 2018, and this was, okay, August 2018 versus November 2018. And then here we kind of had a false signal. This happened with a lot of coins, actually. So this was kind of the outlier here. And then we saw another buy signal here, temporary rise, and now we're seeing currently some more sell signals going off. So Maker, if you're a holder, hold on for choppy waters, because we're starting to see the same kind of group of sell signals that we saw here and here. Any other comments on DAA divergence? I feel like I've been talking a while, so we can definitely move on.
Yeah, just if you can explain how people can get access to both this template and the NVD template on our platform.
Yeah, I will have links up. I'll go ahead and tweet about them after this call, just so everyone can check out the free versions of this. For those of you who have a pro subscription or higher, you'll be able to get real-time updates like this. If you're a free user that happens to be tuned into This Week in Crypto, you get a free look at what it looks like. Otherwise, you will be limited to 30 days out. So what you'll see on the free version is what was happening in mid to late November. And it's kind of a teaser because it shows the proof of concept, but you can't get real-time access. So this is something that we feel that pro subscribers should be entitled to without sharing with those who are not paid subscribers right now. But I'll have links for both on Twitter right after this call ends.
Cool. Yeah. So, by the way, for anyone listening, this is Brian means the official Santiment Twitter account.
Yes,
we'll have links to this.
Santiment at Santiment feed. Thank you.
Mm-hmm.
And lastly, I guess I'll show what I was planning on for the MVRV long-short difference. So this is a measure of basically the average holder and whether they are in profit or in the red. And since May, when there was a large rise that got all the way up to 12.6 or so, we had mostly people who were in the profit overall, if you take every average hodler. And as we speak, we just went into the red for the first time about a week ago, a little over a week ago. Yeah, early December to mid-December, basically. We finally dipped into the red, and this is significant because when people start to go into the red on average, that's when capitulation points start to occur. And we saw
Brian, it could be a good idea for Val to chime in here, because MVRV long short difference in particular, it plots like two different MVRV ratios, right, Val? So rather than a single sort of average profit or loss across all holders, this basically shows the relationship between MVRV ratios of long-term and short-term holders. Would that be correct to say? And can you also expand on what you think this drop below 0% can mean?
Yeah. So MVRV, as general, when it was introduced by the guys in Coinmetrics, it measures the average profit of all the wallets on the blockchain. So it looks at what was the price when the Bitcoin went into the wallet and compares that with the current price. So it gives you an idea as a general for the whole network whether the participants are on profit or not.
Actually, Val, sorry, do you want to share a screen while you're talking about this?
Yeah, sure.
Okay.
Give me a second. Give me just a second to open the right thing. Okay. You should see my screen, right?
Yep.
That's good.
Okay. So this is our graph product. So as I said, generally the MVRV is measuring the average amount of profit that the whole network has. But this is not very good because you have a lot of coins that appeared, let's say, at the very beginning when Bitcoin was starting. So if you take the average profit of the whole network, most probably it's going to be quite inflated. So we developed this thing called time-bound MVRV, which looks only at coins that moved in the last X amount of days or months or years. So here I show the 20-year MVRV, which is basically the MVRV known as the definition in coin metrics, and it shows that on average the network is like 30% profit, like the whole network. Now, as I said, this is not accounting very well for, let's say, lost coins or coins that hasn't moved, let's say, in the last 10 years. But if we look at a shorter time frame, let's say 1 year MVRV, this shows what is the average profit of all the coins that moved in the last year, which should account for things like lost private keys or tokens that, like Bitcoins that are not going to move at all because they haven't moved, let's say, in the last 10 years. And we see that actually for these participants, they're at minus 10% right now. So these, let's say, long-term holders, they're actually in the red. And what the MVRV long-short difference is showing is the difference of profit between long-term and short-term holders. And the idea there is that during a bull run, it seems like the long-term holders are the ones that are at more profit, while during bear market, then the long-term holders are actually at the red, and the short-term holders are the ones that are going to be at much better profits. And the dynamic there is that the short-term holders are going to get more profit because these are the actively trading participants on the market. So they will be like looking at what is going on in the market and be actively investing, trying to beat the market in an actively investment type of style, while the long-term holders are just going to stay there. And when this thing reaches at the bottom, this is like the capitulation phase. So the long-term holders will be capitulating. And on the positive side, when we reach like a very high level of this ratio, then this is going to mean that long-term holders again are going to decide, I have enough profit, I'm going to sell. So this is usually at the top range. So recently we crossed the zero mark. So it seems that we are going into the negative territory. So we can say that right now the short-term holders are kind of the ones that are profiting on this market, while the long-term holders will be at the red. And as this dips more and more, the more probable we are at the bottom, basically. So when this metric reaches very low levels, it's pretty much similar to the MVRV. This is a great opportunity to buy. We saw that the last time this happens was at the beginning of 2019, when the metric reached like minus 35%. So if we see this metric reaching such kind of really low levels, that's like very, very good. The more we go down, the better the risk-reward ratio will be. So right now we are starting to go into the negative territory, and if this trend continues, it will be better and better opportunity to buy. Now, how far it's going to go down, we can't be sure, but we can say that this is like the last low level that we reached. Actually, if we extend the history a little bit, we can see that the bottom has been pretty much consistently around like here is like minus 42%. Here we have minus 35%. So this is like the absolute minimum. Now, I guess it's not very probable we are going to reach such kind of very low levels. But as I said, the more we approach these very low levels, the better will be the opportunity to buy. But we can't be sure how far down it's going to go. So that's, I think, the explanation.
And Val, it can also be like if you go to like the last 10 years of data for the MVRV long short difference, it's also very interesting and very telling that every time basically since the start of our recorded data for Bitcoin, every time that this particular indicator has crossed across the 0% threshold, it has pretty much indicated the beginning of the bull run. So the first time it happened was around July 2012. And then the next time it happened was, and then you can see there, just there, you can see that it kind of indicated the first leg of the rally in 2012. And then the second time it was like 2015, mid 2015, I think, was it?
Yeah, like here, I think end of 2015.
Yeah. And then the final time that it happened was in May of this year. And we actually, or you specifically, published an article when it happened, when Bitcoin was around 5.9K, that the MVRV long short differences for the first time crossed the 0% threshold after like 3 years, and that what that might mean for the price. And I think within a week or so, Bitcoin was already up to 8K or something. So in general, it definitely, even both things I think should be kept in mind, that the extreme downsides of this specific indicator can be pretty opportune accumulation situations, but also keep an eye on the MVRV long short difference and the moments when it passes above the 0% threshold, because historically it has been pretty much on point as far as predicting when the bull market starts.
Yeah. Also, there is this case here that happened in 2014 where it crossed the zero. So that was at $440, and then it went down till actually it was pretty much, the price was actually staying about the same. So the price was actually increasing during this time, but the MVRV long short was dropping down, and then it rebound back to like 620, and then it went down. So I'm wondering, like, this was a kind of an interesting situation here, but it doesn't seem to be the same here. Like here, the price is going down, so the MVRV long short is also following it. It's not like it's going down and the price stays the same or increases. So this kind of situation here, I think it's much different than the one here. So I guess we need to see how far down this is going to go. But I think if it goes down significantly and then it crosses zero again, it should be like a longer term trend, because we see that in the previous situations, this is what actually happened.
Val, do you have a number or value that you tend to look for as to what would be considered significantly for that type of drop?
Yeah. So one of the problems with this metric particularly is that it really depends which two time intervals you're going to pick, and it's going to give you kind of different results depending on that. For example, if you look at this ratio for Ethereum, it will be it's going to show different picture, but that's also because Ethereum has a much shorter history than Bitcoin. I would say that the interesting values are, like, as I said, the bottoms and the tops. And also another thing to keep in mind is that the general trend is that the tops are becoming smaller. And this is also the case for MVRV. You see that these extremes here, like with the only exception like here, these extremes are becoming smaller and smaller over time. So I think this is an indication that the market is maturing. So it's not really realistic to to think that the next extreme is going to be, for example, like around 100%. That's probably not going to happen. The last extreme was around 50%. So as we cross this ratio and start to go up, or maybe start to go for the downside, actually, it seems to be a little bit more stable. So we see like really one super extreme downside here at 70%, but generally the downside has been around 36-40%, and here again around 30%. So I would expect if we have an extreme downside here, it shouldn't cross like 35% for sure. So as it starts to approach 20-30%, that will be like probably the bottom. And for the upside, I would also won't expect something above 50%, to be honest, because like even lower than that, maybe 30%. So this kind of band seems to be narrowing down as we see the market maturing.
Very cool. Yeah, I agree with the assessment that negative 30 to 40% seems to be the trend to look out for as finding those bottoms, because there have been 4 historical times. Let's see, yeah, 1, 2, technically 5. Yeah, no, 4 is correct. 4 times it's actually fallen below 0%, and 3 of those 4 times it's gone below negative 30. So if we see that again, if you see that negative 30% being crossed, that's a pretty good sign that we're in a spot where capitulation is happening, and it's a buy opportunity.
Yeah, and you can see actually here, like the more it's going to drop, the more the market is going to be kind of like chaotic. So you can see that here it reaches minus 30 at 340, and then the price actually didn't drop that much. So it dropped like you can say like 10% more. No, actually here it increased a little bit and it dropped. Yeah, I mean it's not a linear relationship. So if it drops, let's say 10%, it won't be like the price is going to drop 10%. It's not this kind of indicator. So the price could be going like sideways and the ratio will be dropping, or maybe increasing a little bit and then again the ratio will be dropping. So yeah, like you need to be monitoring this metric on a regular basis to be able to assess what's going on.
Thanks, Val. Anything else you wanted to show?
No, I think that's it for the very long short.
Okay. I actually wanted to take these last 15 minutes and give the floor to Jan, because I think it would also be pretty cool to show. So we've shown today a few of the templates that we have developed ourselves using our own data on-chain, so a combination of on-chain social and development information. This is something that you can do as well with our data and with not a lot of coding experience behind you, specifically using some of our Python wrappers. You can tap into our API and do some basic back tests and strategies yourselves. So I asked Jan if he can like prepare a short demonstration of how easy it can be to start using our data, raw data, and try and backtest a few scenarios, and see, maybe discover new trading strategies and new opportunities yourselves. So Jan, if you want to share your screen, and go ahead.
Yeah. Okay. 1 second. Okay. Cool. Yeah. So the article I'm basically writing at the moment, as has been said, is focusing on simple ways of backtesting. Just for the people who don't know, backtesting basically refers to the idea of testing any kind of trading strategy on historic data. So if you want to know, or you're thinking about, buying every Monday or something, you can actually go back in time on historic data and calculate how much profit would I have made, basically. And the interesting thing is, like, it's actually a very intuitive approach, and but it's not used a lot, at least from what I see with traders. For hardcore quants, of course, they do it, but with traders, especially with new ones, it's actually not very common to see people trying backtests. And I think one of the main reasons is that it's the available stuff that's out there in terms of software or programming packages is basically either it's like very like unflexible, you can just switch between like a few moving averages, or it's super complicated, where you basically have to learn the whole language of the backtest to do it. And I think for like medium complexity strategies, that actually shouldn't be the case. It's actually relatively simple from the logic to do something that is like a simple, quick, and dirty backtest. And any backtest is better than no backtest at all, just trying with your own money and potentially losing a lot of money. So it does make us a lot of sense to just like get to know like a bit of this how backtesting works. And basically what we wanted to write here was like this one article, how to do it in Python, in basically just 2 lines of Python code. And then we want to do probably another article that does similar things in SAM sheets, so just in the spreadsheets basically, because there's also possible to get like a simple backtest running. It can't get too complicated, but it's possible to do like a simple backtest. I don't want to go too deep into the technical details here in this article, I guess, because I don't know like how many people are fluent in Python. But basically, what I'm doing is downloading some data first with the SandPy module that we have. It's very easy to basically in one line you import the module, and in one line of code you download historic data for Bitcoin, daily data for Bitcoin for 1 year. That's free. If you want more data, you have to like book some packages, but like small amounts of data are generally free. Then you do some simple, in this case, we're doing a moving average strategy with a 50-day moving average and a 100-day moving average. And we basically define these moving averages very quick and calculate the returns, not too complicated. And then basically what I'm doing is in 2 lines of code, I can describe define my strategy and test it. Very simple idea behind that is basically I have a time series of a moving average of 50-day moving average and a 100-day moving average. And my strategy is basically whenever the moving average 50 is above the moving average 100. And that's basically what I do here. I just describe, is it above? And the thing that I get in return is just a time series of true and false, which is encoded in 1 and 0. And for the backtest, there is a bit of different stuff going on here, but like the simple idea behind it, I just take the daily percent changes, the returns of the price, and multiply it with this time series of true and false. And if I have a 1 for true, I want to buy, then I multiply it by the returns by 1. And if it's false, then I multiply it by 0. And obviously that sets the returns to 0. So I'm only invested when the moving average 50 is above the moving average 100. And with these 2 lines, basically I have the strategy, and then I can simply plot it. So in this case, this would be the most simple plot. You can see like whenever the strategy flatlines, that's when I'm not invested, then that's when I have sold Bitcoin. And I can also compare that to a benchmark, in this case, just holding Bitcoin over the same period of time. And in this case, for example, we can see this strategy would have made a little bit more money. On the y-axis, you can imagine this as like if I had started or if I had invested $1, I would have ended up here with like approximately $2.50. Within 1 year, so not so bad, and just holding would have gotten me in the same time around $2 out of $1. and you can also print that out, which would give you the exact numbers. So like $1 into 250 with the strategy, and $1 into $1.91 with the just holding. Yeah, so, and then you can, like, it gives you like a bit of nicer visualization and stuff, some tips on how to use it, some things you need to look out for, some things you might want to improve. But generally the idea is to have to tell people or show people how simple the concept actually is, and how to do it in relatively simple terms. And I think it's something that should be in everyone's toolbox if you're trading, because instead of just losing a lot of money, you can simply test a bunch of strategies and see what works. Obviously, you need to still be somewhat careful. Just because it's a nice backtest doesn't mean you will guarantee make some money. But yeah, like the idea is to give like a hint on how to do this very easily, and then we kind of want to do a follow-up. If someone has no clue about programming, about Python, we're going to do like a follow-up article on how to do it relatively easy in spreadsheets.
Awesome. Thanks, Jan. And we're going to be publishing this post early next week for everyone that wants to get a comprehensive overview of how to do this. It would also be good if Max Bartel is on the call. I think he is. Max, are you here? Oh no, he left. I just wanted to check. How can people get started with SandPy? Can you explain, Jan, for people that aren't aware of where to go and how to get started with the Santiment Python wrapper in the first place and start using our data?
Yeah, sure. So in the article, there's definitely going to be a link to our GitHub repository, for example, and that basically gives you like a simple intro. Typically, if you have pip, you can do a pip install SunPy. Relatively simple, just like your regular Python module, you can install that, and then it gives you basically all the commands that you can do. You can get all the projects that we have with ticker and slug and name, and then you can do we have all kinds of metrics, network growth, daily active addresses, token age consumed. A lot of that is free for a smaller period of time. If you want to have more access and more data, obviously you need to buy a package deal to get the API for full access. But yeah, like even for starters, there's a lot of data here that is free that you can simply use, and it's as simple as using basically as simple as downloading a Python module, and then it's one-line commands typically that get you data, all kinds of data, on-chain, social, pricing, whatever you want.
Awesome. Yeah, thanks, Max. I assumed that you were on our YouTube stream, just paying attention. Cool. Thanks a lot, Jan. I guess.
Yeah, by the way,
ahead.
just to plug in something here, we also have some modules for making backtesting and visualizing things even easier, and probably they will be merged and documented into the SunPy library very like in the next in the following weeks, and you'll be able to do such kind of backtests even easier.
Yeah, exactly. So we built that in. It's not in the documentation yet, but basically like a bit more complex version of a backtest is in the SandPy module, and you can use that also basically as easy as importing a method, a function, and then running this backtest. It's even easier than programming it yourself.
Really cool. Thank you, guys. One final thing, we got about 5 minutes left that I wanted to discuss, and I'll share my screen now. Just one sec. I wanted to give a short follow-up to an insight that we wrote about a week and a half ago about Matic. So Matic was pretty hot on crypto social media over the past few weeks. And there's a pretty good reason why. If you go to app.santiment.net, which is our flagship platform, can type in Matic here and check what's been going on with the coin. So this is a 6-month view for Matic. This is a dark mode that I'm using. Maybe this can be a bit clearer. So obviously Matic went on a monster spree throughout, say, October and November. And you can see kind of how the social volumes for the coin have correlated with its price action. You can just click here, go to social. Oh, actually, for some coins, I think we need to go here, just type in Matic, and you can plot it against the price of the coin and see how it's been growing. Now, the issue here is that this spike kind of nullifies all of these other spikes and mentions. But when you would remove this spike, you would see like very big jumps in Matic related chatter all throughout the rally. And you can actually see if you go to back to the coin's profile page, you can click here, go to trending position, and this will calculate all of the times that this coin has appeared on our top 10 emerging trends list, which is a list that we keep updated pretty much every few hours, that calculates the top 10 words that have been gaining the most social volume on crypto social media. So this is the list. You can find it on app.santiment.net/labs/trends. And here, pretty much any time that you see a coin appearing on this list, it can be, especially if that coin is during an uptrend, it can often be an indicator of an upcoming correction, given that the hype is pretty much at its peak, and that people are very likely to start kind of moving on to other things in a very near future. So we can see sort of how the hype for Matic has progressed over several legs of its rally, and has finally kind of went to its peak at the very top. So you can see on the left it says that Matic was first here on the trending positions, which means that it was on top of our list. It was the most talked about topic based on our crypto social media data, which would be a good time to kind of leave the coin if you were invested in Matic at the time. But what I wrote here was that, so basically I wrote this while Matic was still kind of charting new highs. I wasn't myself sure whether this was really the very top or we were just approaching it, because even though Matic was at the time starting to really bust out, so this is without that top spike in social volume, this is what the chart looked like at the moment that I was writing the article. You can see that there's been a huge spike in mentions of Matic. However, it didn't seem like the top just yet. And the very reason why I thought we might want to wait a bit more before we actually leave, if you're in the trade, you want to leave the trade, is specifically because of the on-chain activity, which has continued to, by this time, mirror the pricing rally pretty much overall. So very often what we usually see is that once there's an uptrend in price and there's a declining on-chain activity, this is pretty much a telltale sign that the coin is pretty much, has stopped and peaked for the time being. You can see this time and time again on different coins. For example, if we look at REN, let's look at REN's daily active addresses. Let's look at the last year. Yeah, so this is what I'm talking about. Once you see so you can see this spikes in daily active addresses pretty much any time that REN has went on during the summer has went on a rally, and when sorry, let me try and update this page. But basically, whenever REN has kind of experienced a drop in daily active addresses, or a divergence between what the price was doing and what the on-chain activity was like. So as the on-chain activity starts to decline, this is pretty much an indicator that the price is no longer able to sustain itself because there's simply not enough interest in the coin. However, at the time that I was writing this was still pretty much, the crowd was still in it. You can see the spike in daily active addresses, the spikes in network growth. So as far as on-chain activity goes, the rally was still on and the crowd was following it. So I said, even though there was a spike in social volume, which is often a pretty good indicator, I would wait until we see a drop in daily active addresses before I would pronounce a top. Another sort of bearish indicator that I mentioned in this article was a declining amount of transactional volume. Pair that with this spike in social volume for Matic seems like a forming top, but I wanted to wait until the daily active addresses have kind of mirrored the bearish indicators for other metrics that we've seen. And this is exactly what happened. So if you, this huge spike in daily active addresses was pretty much capitulation, but if you look at the data without that spike, you can see, oh, how do I? You can see, so this is when I pretty much wrote the article right here, when there was a spike in daily active addresses. And you can see this divergence start right here around the top. So basically, the crowd interest beginning to wane, and then right when Matic dumped almost, I think, 70% within a day, the crowd kind of started leaving the trade and sending a bunch of its coins away from exchanges. So this is another way that you can kind of utilize our data in different ways and combine different indicators in order to really be sure that there is a forming top or not. One other interesting, I think I even have it here. Nope. One other interesting thing that we've seen with Matic that that has kind of confirmed the top was its exchange flow activity. So let's see what was happening around the tops for Matic in terms of on-chain inflows to exchanges. So there you go. This is pretty much where I started writing my article. The exchange flows were okay, but it seems like the crowd was pretty much still kind of interested in the coin overall. So this huge spike in exchange funds flow, or which basically shows the differences between inflow and outflow of exchange of coins, of in this case Matic, going to exchange wallets. This spike was pretty much the 3-month high for Matic, which means that a lot of people have started massively moving Matic to exchanges, increasing the sell pressure for the coin, which pretty much ended the rally dead on its tails. We can also see that the token supply on exchanges has reached its top right around here on the top, that it reached, so 22% of Matic has been sort of offloaded to exchanges here. So it went from 18% at the beginning of the rally to 22% of Matic's total circulating supply being moved to coins, being moved to exchanges throughout its October and November rally. And you can see a spike in daily active deposits as well, or meaning the amount of addresses interacting with the Matic coin right around the very top as well. So the divergence in daily active addresses and price combined with the exchange inflows would be an additional sell signal rather than just looking at our social data to really take as much juice as possible from any particular coins rally. So I just wanted to show a few other metrics and a follow-up to the article that I wrote a few weeks ago.
Also, if you look at the MVRV, you're gonna see that the MVRV all-time high was just before the price reached the top, which is another red light bulb that shows that you need to be getting out of the ship as soon as possible. Like the moment when the price is increasing, the history is kind of short for this coin. The moment when the price keeps increasing, but the MVRV is going down, that's like a big red alert that you need to be careful.
So
let me take a little bit.
Let me take the short time. Yep, you're pretty on point. So let's see. So the 2 years time bound in this case, pretty much given the fact that Matic has only really been trading for about 6 months, any sort of long time bound takes all of the coins into consideration. So here at the very peak of the price, this was Matic holders being at about 658% profit overall, and this is the moment when they decided to offload their bags. And Val, it is interesting, you talked about this a few weeks back, right? This sort of double tops for MVRV. I think you mentioned it being sort of an occurrence that you found on different coins, including Bitcoin, where it's not this there's a small sort of dip in MVRV before it's sort of everything starts to collapse, was it not?
Yeah. It's a pattern that I see pretty much for any pump that like very, very strong pump. We're talking about coins that are increasing like, I don't know, 3, 4, 5 times their price. Because these are really, really strong rallies. So there's going to be very big hype behind them, a lot of FOMO going on. And you have the long-term holders behind that. Like they're going to decide when the price is going to go down. So this all-time high and the dip after it, but the price continuing to increase is like this market force where you have the guys with the cheap coins that are starting to unload at that point because they're really at a very high profits. But the hype is still driving the price up because people joining in wanting to they're driven by FOMO. They want to get the nice profits. But the big time, like the long time holders, the big holders, after all, they're going to cool down the market because they're going to dump huge amount of money on it. So yeah, this happens pretty much for any major bull run, like for Bitcoin, for Ethereum, for synthetics. I think it happened for synthetics. Yeah, like any big pump that happens. I just don't remember whether synthetics has a big pump.
Let's see.
So basically anything that really pumps to very, very high levels.
Yeah, so I think maybe here.
Yeah.
Yeah, just one sec while it loads. Yeah, it's for some reason when I zoom out, it looks clearer. These two sort of tops before.
Yeah, you can see how the top is actually just before the price. The real top was at how much percent of MVRV?
Let's see.
I think it was like 300 and something percent.
Yeah, 311.
Yeah, at 155, and then it reached 140, but the MVRV was not following. The MVRV was going down at that point. So the long time holders were dumping on the market at this point very heavily.
And it's interesting that you actually mentioned the what the whales were doing, or just big players were doing at the moment. I mentioned this in the article as well. So basically, I showed that what whales were doing at the moment, and it seems like they were ahead of the rally in many ways. So pretty much around 25 million Matic were moved from whales. So basically, any address that has between 1 and 10 million Matic before the rally even started. So these addresses started offloading their coins to exchanges, most likely even before the rally even began, which was, if you were looking for an entry point, this dip in the holdings of the pretty much top Matic holders was a pretty good signal to keep in mind. And then you can see what the Matic holders were doing at the very top by looking at our holder distribution metrics. So here you can see let's go to the last 6 months. So you can see on this chart, pretty much we have segmented all of the Matic holders based on how much of the particular coin they're holding. So for example, this chart only looks at the total balance of addresses holding between 10 and 100 Matic coins. And you can kind of correlate it with the price action over time. So what I wanted to look at is these super whales. So here I was in the article, I was showing that currently, even though they started dumping before the rally, currently they were still kind of ambivalent. Like they didn't start offloading yet. You can see like a small sort of downside here, but they didn't really start dumping onto the exchanges just yet. And at the very top of the price, this is exactly what happened. So let's compare it before and after so you can see what happened. So this is before, while the rally was still going on when I wrote the article. And then what whales then did pretty much a day afterwards was really started dumping their coins, offloading their coins to exchanges, which given the price action was a very bearish signal, and it pretty much ended the rally right then and there. So another very interesting and important thing to look at when you're considering exiting a trade is what the big players are doing. And you can see that they started, so this might not seem like such a big dump, but for example, so let's look at the 2-day sort of activity. So on December 17th, there was 110 million Matic in these wallets, and then on December 7th, 110 million Matic, and then on December 9th, there was 96 million Matic. So this is a pretty significant dump on the market, which, given the general sort of crowd disinterest that we saw in daily active addresses kind of declining, paired with this huge amount of Matic being dumped on exchanges by whales, this is, a textbook top formation. And you can see it in our data.
Yeah, somebody made a couple of $1 million, I think.
For sure.
It's like over between, I guess, 1 and 5 million or something like that.
No big deal.
No big deal. So yeah, just wanted to make a quick follow-up to the article that we wrote last week. We'll have another Matic write-up showing some specific addresses that we found whales, how they were behaving during this time, that you might want to keep an eye on for in the next couple of days. Other than that, this will be it for this week's edition of This Week in Crypto. Thank you all very much. And for anybody listening, whether live or later when we share it on Twitter, if you are interested in this sort of discussions and you would like to be part of it, please let us know ahead of time. If you have a topic in mind that you would like us to cover, or if you have found something interesting in our metrics that you would like to discuss with the actual Santiment team, we'll be happy to, give you a spot and let you, present your case during the next week's call. And for everybody on this call and everybody listening online, I will talk to you in 7 days.
Thanks, everyone.
And happy holidays.
Happy
holidays.
Happy holidays.
Thanks. Happy holidays.